Bitcoin could be on a scenic route from where we are now down to $15,000 and then right back up to 60K. And I'm going to be showing you why in this YouTube video. There's quite a few important things to go through, and before I get there, I'm going to start off with a shorter term analysis, because what I want to bring to your attention right here is we have been looking at this wedge. These are generally quite bearish, and Bitcoin has broken down from this one. There was a few different ways to draw it. We could have drawn it like this. We would have broken down very early. We could have drawn it like this, which was the main one in my opinion, and we have also broken down from this now. And what's more concerning about this is now that we have fallen below, if you draw this line a little bit closer to this rejection right here, it starts looking like we're actually just kind of consolidating right under resistance right now, just kind of trading sideways, slightly moving up. And if you've been paying attention on this YouTube channel, that basically means we've got our first leg down. Now we're forming a bit of a rising wedge, a rising channel, bam, right there, and that's potentially leading into a bit of a drop lower. So if you've been subscribed, you're going to know all about how the market tends to move in those ways. Make sure you are smashing up those likes, staying subscribed as well with this very time sensitive content. But the reason that this is very important is because if we're actually trending lower and then pausing briefly, potentially fighting it a little bit and then moving back down, this is quite a typical, this plays out on all sorts of time frames. It's playing out right now. Actually, we're potentially doing that final third leg right now. It played out over here. I can zoom out even more. Guess what, ladies and gents, it played out right here as well. Bam, that's the second, that's the third leg. Super typical market price action right here. We're doing it again. Now it's quite a small time frame. I don't want to draw big conclusions off this just yet. I think it would be unfair, but it's pretty clean, ladies and gents. If we take a look at this, just looking at the highs and the lows, it's pretty clean. It mostly fits in. We zoom out a little bit, we can really put a nice channel on this, and it does definitely look like we could be at something like this. And the key reason that this is important is because really what all of this means, what the technical analysis behind this actually means, is that there's a little bit of bearish momentum in this market now. We really picked up a lot of steam to the downside. If you take a look at this drop and we just measure this from high to low, that was minus 17-18% within 5 days. That's quite quick, and of course most of that dump will have happened within a much shorter time frame than that. Most of this dump actually happened within 1 day, this 11% move. So quite a lot of bearish momentum here, and literally all the market needs to do now is wait for that bearish momentum to catch up to the trend. What's the form? Maybe it's the EMA ribbon, ladies and gents. Look at this on the 4-hour time frame. It's already here. It's already on our back. In fact, we've already been rejected from it once, if not twice, just with this wick right here. This is not to be taken lightly. But the good news is that if we do overcome it, which means rising beyond the mid $22,000 range, we're probably going to be good. We're probably going to have a nice burst of short-term strength if we do end up rising up. And that's going to be where my kind of invalidation is, because right now this market has clearly flipped bearish, in my opinion, just in terms of where the kind of energy might be flowing in this market. We've got that EMA resistance right here. Let's look at this on the 1-hour time frame. We're already getting some kind of rejections off this area. We've lost the spread, so it's not relevant anymore. Daily time frame, look at that, guys. We did end up flipping it. We got it mostly quite bullish, but we lost that opportunity. We're now flipping right back to bearish, and that spread is widening as well. So this resistance is potentially going to be a bit of a problem. Now, if you don't know what I've been talking about in the last couple of minutes with these EMA ribbons, then punch this into the YouTube search bar. It's a free video. It's part of my paid course, but you are getting it for free with this right here. So just type this into the YouTube search bar. You can watch my video on how to get this indicator and how to use it, my preferred ways to do those things, and so on. So check it all out. While you're there, you already know what to do. Smash the likes on the way down. Even though you're scrolling up, you already know the deal. We are on a journey for truth in these markets, and so yeah, 1 day EMA ribbon not looking amazing. It is going to become a problem, and if we start looking at other indicators that I like the beautiful Ichimoku Cloud, guys, by the way, this indicator is like 150 years old. This is old. It's Japanese, and actually one of our core team members wrote a dissertation on it. So I know a lot of people are like, why does 𝗲𝗏𝗏𝗏𝗏 like the Ichimoku Cloud so much? Because it's a fucking good indicator. It stood the test of time, and we know this indicator in and out, back to front. I make this analysis super simple for you guys because that's the goal. Good education should be simple. But we know this indicator really well, and I've been using it for more than 5 years. I think this is one of the best indicators you could possibly use. And again, look at how beautifully it's been predicting resistance for us. Look at how beautifully it predicted support for us. This bounce right here, this bounce right here, slowing down the sell-off right here. The sell-off was not intense right here, right? I'm not saying it's because of the Ichimoku Cloud, but it happens to line up. And there's a lot of coincidences like that. At what point does it go from being a series of coincidences to a reliable indicator? But it's looking like there is some mounting resistance here as well. So this is my primary concern, is that Bitcoin's kind of, the way I see it, no matter which position it's in, potentially going to get smacked down, and taken down to some quite low levels. But that's where the good news starts, guys, because, one of the key things that you will have heard me talking about across this market over these last months is that Bitcoin loves to form wedges. In fact, it's not even these last months, it's been all year I've been talking about patterns like this, where Bitcoin has formed quite a lot of wedges that look something a little bit like this. Let me draw a bunch of them on for you. You're already going to know this if you've been watching this channel consistently over this time. Bam, look at this. There's so many. We can draw them up. We can draw them up here when we set that all-time high right here. Bam, another one right there. There's another one right here. They are all over the place. Look at this, guys. They are all over the fucking place. All over the place. I can just keep going. And the reason that this is important is this is clearly a characteristic that the market likes to repeat. One of the best ways you can give yourself an edge in any market, especially Bitcoin, is Bitcoin has specific tendencies to repeat specific characteristics over time. And this is clearly one of them. Since the beginning of 2021 to now, more than mid 2022, this is more than a year and a half. Bitcoin has continuously exhibited the same characteristics. Look, there's another one right here. This one's quite small and hard to show, but it's still there. And one of the key things that you're going to notice from these is that if they're angled down, if these wedges are pointing down, the breakout usually happens up. Look, take a look at this one right here. This is angled down. This is angled down. This is angled down. This is angled down. And the flip side for if it's angling upwards, right? If the rising wedge is moving up, if it's a rising wedge, this would be a falling wedge. If this is a rising wedge, look at this, we break down. Look at this, we break down, we break down, we break down. You can't make this up, ladies and gents. This analysis is spot on. This is 100% accurate. Try and find me an exception, and I'll sit there quietly in denial, or I should say in defeat. But you won't find one, because this just works. This just works. And you know what? We have formed another one of these rising wedges here, which has now broken down. So that is a point of concern. But what you're really going to like, and I already know you're getting that lotion out. I can see what you're doing there, bro. This is where things get really, really exciting. Take a look at this. We've got a big falling wedge right here. And I actually haven't drawn this properly. Bear with, let me figure out how to draw this properly. It looks something a little bit like this. This is where it gets really, really exciting. I know exactly what's going on right now with many of you guys. Let me show you this chart drawn correctly right here. This is a much better example. So yeah, I just completely fucked this up. It should look something a little bit more like this. And the reason that I think this is potentially quite important is, like I said, these wedges, they come up in all different sorts of sizes and time frames, right? So we saw that, for example, we had quite a small rising wedge right here. We had quite a large one over here. We had a large falling wedge here, slightly smaller falling wedge here, quite a small falling wedge. They come in all sorts of different sizes, all sorts of different time frames, and they can also wrap around each other. You can have a series of small falling and rising wedges within a larger rising wedge or a falling wedge. It's just a characteristic of the market. This is just what the market does. And you know what? This, like I said, being a falling wedge, angling down, let me just make sure. I don't think you guys can actually see this. I'll hide my camera. This, to me, is quite a bullish sign right here, because we've got this beautiful falling wedge right here. It's potentially, we're potentially just getting rejected off this resistance area, but that could only drop us down into the support level right here around the 16K mark, before potentially capturing a little bit of support. And the really fun thing right here is if we measure the point where we have two contacts on the line, so that would be over here. This is the first time within this whole wedge that both the bottom line and the top line have been hit. if you draw a line straight up from there, that gives us a $42,000 pump. And if we forecast that from what our potential breakout point might look like, a further $41,800 rise puts us at 59K. So that is absolutely brilliant how that math is lining up. And what I've gone ahead and done for you guys is actually just taken a ghost feed of this chart. So that means you can basically, there's a beautiful tool right here. Let me show it to you. I know you can't see my toolbar, but it's the second to bottom icon above the ruler. Anyway, you'll find it. It's ghost feed right here. And if I simply take, so 1 second, let me make sure I've got the right one here. Yeah, if I simply take this price action up to here, this is not the right tool. I'm sorry, I've completely messed this up. It's bars pattern, not ghost feed. And I take it like this, I can then, kind of overlay this to see what it might look like. And I'm getting, a similar target right here. I mean, it says 57K this time, 62, whatever. It doesn't really matter. We're not going for exacts because this is quite rough analysis. And we're only trying to demonstrate a point. I mean, if this move does actually happen, but it stops at even 52, doesn't really matter. It's still going to be quite a successful move overall, quite a successful bit of TA. And this to me looks really, really good. I don't know how I feel about such a long-term, chart pattern like this. I don't generally feel like Bitcoin can be charted like that, but Bitcoin is maturing. It's not the same asset that it used to be. Let me just make sure I get my camera back on. It's not the same asset that it used to be. It has matured. It has grown up quite a bit. So maybe we can start applying some longer term analysis. And even then, the bottom line for me that I think is quite significant about this is purely that, Bitcoin has formed so many of these patterns over these last year and a half, a little bit more, that if it's potentially forming an even bigger one, I'm not going to ignore it. I think that's a really, really big deal. I think it requires a lot of attention to be paid to it, so that, we can, potentially take advantage of it if it's possible. And, we take a look at where the potential bounce zone puts us. This is the Bybit chart, so it's actually not possible to show this to you. But if I look at this on the BLX chart, we just kind of, the rough range would have been something like this, right? I mean, if I just draw a box, we're kind of looking at like, something a little bit like this for where Bitcoin could drop down to. There's a lot of price forecasts in this zone. There's a lot of people saying, Bitcoin down to 18, 17, as low as 14. I'm kind of in the 14K camp. I'm in the 11K camp, somewhere between there as an absolute low for the market. Not saying that I think we're going to go there. I'm not going to make any conclusions like that until we start, losing our, low that we set, really, because it's until we lose that low that I think we have a chance at dropping down. Otherwise, right now, I still think we're in a pretty good position overall. But I know a lot of people have price predictions all over this range, and I just think it's cute that, this 15K target kind of falls right in the center of it. Guys, if we take a look at the fear and greed index, we're now at a reading of 29. We were quite high for a little bit. We were peaking basically in neutral territory right here. Spent quite a lot of time there. So actually, in hindsight, I was talking about this on the YouTube channel. It's quite obvious that we did start to face a lot of problems when that fear and greed kind of shot up, but we are now back into nice areas of fear right here with this sentiment index, and if we do slip down to 25 or lower, that also puts us in extreme fear. So we're right back where we want to be. If we take a look at where the longs and shorts are in the market, Binance still massively long, a ratio of more than 2 to 1, which means for every for every one long, there's 2 shorts. I mean, this is quite a big ratio, but Bybit and FTX are pretty even. So obviously we want to see these numbers continue to shift towards the downside. We want to see that more people are short than long, because that tells us that people are quite negative. People don't really think the price is going to go up. Of course, naturally, it's hard to expect that if so many retail traders, because that's what Binance is, right? Binance is quite retail. Binance is quite beginner focused, beginner centric. You don't generally find experienced traders on Binance. There are a lot of them just because they capture a large volume. But percentage wise, it's going to be other exchanges like Bybit, which I personally use a lot, which generally tend to be the place that the more serious traders go to. They have all the same features. They're almost identical most of the time, but it's just about it's which exchange is more trustworthy, which is more reliable, and so on. And Binance for some reason just doesn't seem to be there, and I have my own reasons for not liking them anyway. And by the way, guys, if you do want to check out Bybit, you already know the deal. there is a link in the description for you to get some really nice bonuses when you sign up. But we take a look at this, and again, that does tell me that there's still a little bit too many longs in the market, so potentially some of those do need to be flushed out, and the way you flush out longs is by dropping the price. The problem is that if people are still bullish, then when the price drops, longs pile up again. And then you have the same problem that you started with. So that's kind of the problem that Bitcoin has been stuck in for quite a while now. And I think that is one of the things that's stopping it from rising up, is just people are a little bit too bullish, but that goes over time. You kill a bullish bias by either dropping the market, just continuously failing support levels, or by extending out pain across time. And this market is doing both. Obviously, this bear market has been quite vicious, and so that's something to keep in mind as well for the market. But this kind of 15K move, would only be part of falling down to fulfill this falling wedge pattern, to find support and then potentially break as the lines are really tightening and coming together. You can't really stay in these patterns for very long, so I would only expect 1 or 2 more hits max. So either failing here and then dropping down, or bouncing off here and then breaking up. But I don't think that we have very long left in this pattern, and because of that, seeing a breakout, if we do end up getting that bounce off 15K or whatever, if it happens to be 14 or 11 or 17, it doesn't really matter. The point is just we drop down and then we attack the resistance again. That could turn out to be quite an explosive breakout opportunity for Bitcoin, and of course that would be very, very exciting to see price levels like 60K again. I think it's going to depend on a lot of things, and honestly, Bitcoin can print the most beautiful, most appealing chart patterns ever, but if the more mainstream markets like the S&P 500, by the way, if you watched my last video, caress that like button for me, ladies and gents, because that was some beautiful analysis. You really can't make this up. 𝗧𝗡's getting it bang on the money once again, telling you guys that the S&P 500 would drop right down into the support area like clockwork. That's exactly what happened. It is now a Monday. Why is the market not open? Is it like a bank holiday in the US or something? Or did it just open? I'm super confused. I don't know. I'm not going to try and work this out. But we are going to see this trade apparently in about 16 hours from now, and we hopefully are going to get a little bit of a bounce. And this is the thing, is I think that Bitcoin's health is going to be dependent on equities. I think it's going to be dependent on how strong or weak the dollar is. The dollar is incredibly strong right now, already really back at its highs. If anything, I think this is a good bit of information for Bitcoin, because the last time the dollar was this high, Bitcoin was completely wrecked. This time Bitcoin's at a much better area, but overall, if the dollar is going to start going on a bit of a rip again, it's probably not going to be good for the S&P 500. If the S&P 500 isn't going to be doing well, where is the investor confidence going to be for an even more risky asset like Bitcoin? I don't make up the rules. I'm just telling you guys what I'm seeing and what factors I think are at play here. You already know the deal. You're getting very, very raw, truthful analysis on this YouTube channel, and oftentimes the truth ain't nice. But that's just part of the deal. Ethereum dropping against Bitcoin. It lost this crucial support area, and potentially it does have very, very nice support in this range, but the bigger area was what we lost, I think. Potentially quite a large drop to come for Ethereum. This would be overdue. Ethereum has fallen quite a bit. It is down at its 382 support level though, so pay attention here. This is a beautiful bounce zone for Ethereum. Of course, I don't think Ethereum is going to do much without Bitcoin, and I don't think Bitcoin is in a particularly strong position. But Ethereum itself, really nice. And considering that Ethereum has been leading the market, it could indeed be the case that Ethereum is what takes the first leg up, and then Bitcoin follows. So that's something that I am going to be open to. I really like what I'm seeing with Ethereum. It's a nice pullback. It's a healthy pullback. It does have a lot of resistance up ahead, so it's not going to be easy. But I think what I really just want to see is what happens with the dollar and with the S&P 500 to make my decision on the next couple moves that I'm going to be making. Whatever I decide, it's going to be going right into VIP. So if you want to watch me trading in real time, follow the first link in the description down below. I'll tell you absolutely everything I'm looking at, why I'm looking at it, what I'm going to be doing, where I'm entering, and so on. It's really, really in-depth. There's a lot of information there. I can't summarize it in this video, so just follow these steps. This is the only way to join me. If you try and search for my name on Telegram or whatever, you're only going to find impersonators, so please be very, very careful. Only use the links on my verified channels. So first link in the description down below takes you to my free channel where you get more analysis from myself and my team for free around the clock, pinged straight to your phone. And then to jump inside VIP if you really want to grab these opportunities by the balls and see exactly what's on offer, then follow the just press my name at the bottom of any post inside of Telegram, and then click on send message to ask me how to join. Once more, if you want to check out Bybit, there is an offer for you to get some free cash when you sign up there as well on the main exchange that I'm using. And yeah, switching back to Bitcoin, a nice position for Bitcoin overall. I'm just not very worried. I don't think that things can get significantly worse. I think overall the fact that we have been stuck in quite fearful territory for a very, very long time. I mean, basically it's been shit, really. Let's be honest. It's been shit since November 2021. We're now in August of 2022. We have had moments where we experienced a fair bit of joy. We had moments where we even got greedy, but they were few, and they were few and far between, and they were not intense either. So a lot of these things running in our favor, I would say, in terms of where this market is overall in the long term. And that's why I'm quite happy to show you chart patterns like this, and talk to you about how these kind of things might end up breaking up. Because I think it's time, while nobody else wants to discuss these ideas, I think it's time to start really opening our minds to something like this being possible, because it's precisely now where it's so hard to believe that it might actually happen. And guess what, guys? That's how it happens. So there you go. If you have enjoyed this one, you know what to do. I'll see you all in the next video, and I'm out. Bye-bye.